A very good afternoon. Asian stocks took a tumble in today's session. This as global markets continue to reel from the Trump administration's reciprocal tariff announcements. Japanese stocks led the declines in the region on Friday, tracking the steep losses registered on Wall Street. Australia's S&P SAX 200 fell by 2.44% to close down, sliding into correction territory after declining 11% since its last high in February, while South Korea's Kospi slid by 0.86%, while the other markets we usually quote, that is in Hong Kong and China, were closed for holiday. The Nikkei share average closed down 2.75%. Over in the United States, U.S. markets saw a significant sell-off in yesterday's trade following Donald Trump's announcement around reciprocal tariffs late on Wednesday, just after the close of the markets there. So investors were only able to fully respond in Thursday's trade. Like everyone else around the world, they're trying to get their heads around how these tariffs will affect economies, businesses and ordinary consumers around the world. The Dow Jones Industrial Average declined by 3.97%, let's just call it 4%. The S&P 500 lost a whopping 4.83% on the day, while the Nasdaq Composite Index plunged by 5.97%. Looking at our local indicators, we currently see that the all-share index is down 3%, trading at 83,519 index points. In terms of our currency, we see that the rand has hit a 3-month low against major currencies. It's trading at 19.01 against the US dollar, 20.97 vis-a-vis the euro, and 24.75 against the British pound. On the commodity front, we see that gold is trading at $3,101 an ounce, platinum at $940 an ounce, while Brent crude oil is trading significantly lower at $66.63 a barrel. Well, for more on the markets, let's have a conversation with Grant Nader. He's a senior portfolio manager at Benguela Global Fund Managers. Thanks very much for joining us, Grant. So, a terrible situation that we're seeing on global markets, consistent declines, and of course, America had a chance to actually express itself yesterday with markets there coming down. What is your feeling about what we're going to see in terms of the markets going forward? Because there's so much uncertainty. This has got major implications for the global economy, and it's very difficult right now to be able to kind of assess the damage.
Yeah, I think, good afternoon, Nompu. I think you've hit the nail on the head, right? It is difficult to assess because the story's not over. I think we've seen, act 1 or 2 of perhaps a 4 or 5 act play. The US has come out, it's fired its shots. You're starting to see other countries are going to reciprocate. China's just come out today saying they're going to raise tariffs against the US. The next step will be ultimately they'll probably sit down at the negotiating table. So there's actually quite a lot of story that's still untold. And I think you can expect heightened volatility for some time yet. Of course, that in itself has a hugely negative effect on economies and on markets. And so you can expect more of this kind of very challenging market environment, I would expect, over the next 3, 4, 5 months, I would say.
Yeah, it's going to be tough. So locally, we see that the JSE, of course, has also not been spared. We're down 3% at the moment on the Aussie. And financial counters seem to be the ones that have really led the charge in terms of the declines. And we know that they're heavily correlated to the local economy. What's your sense of what consumer-facing stocks are going to be looking like for the next 4 to 5 months, let's say, given everything that's taking place?
So I think we're unlucky in that we've had 2 significant things happen at the same time. The budget announcement, the GNU conversation happened at exactly the same time as this tariff announcement. And so that has been largely responsible for the financials, which have been hit very hard. The rand has weakened tremendously, but it's weakened far more than all other currencies because the dollar is actually a weakening currency against all other majors. The rand, though, is weakening more than all of them. And that tells you it's not just about the tariffs. So the knock-on effect, if you combine these, a weaker rand, a slowdown in the economy, poorer consumer sentiment, this doesn't bode well for consumer-facing stocks. I think the only saving grace is that we've seen oil fall about 10%. That's even more than the rand has fallen. So on a net basis, the rand oil price, which is really important to us, has come down. And that's a small silver lining. if I'm looking for something to be positive about, I think you need to be careful in consumer-facing stocks. They're not all made equal. The staples, the stuff people need to buy, the food, the pharma, those kind of businesses will still sell product. But if you're a nervous consumer, you're going to be a little more reluctant on your discretionary purchases, cars, fancy clothing, etc. So be selective about what you're buying. I'd say there's still more difficulty to come.
Indeed. So I understand that the US Fed Chair Jerome Powell is expected to speak a little bit later today. Do you think that the US Fed, as well as other central banks, are going to have to change their monetary policy approach, given what has happened? I mean, Donald Trump is calling it Liberation Day, but that doesn't exactly align with what we're seeing on the markets.
Yeah, they're liberating value from the stock market. No, I think the reserve banks have a dual mandate, especially the Fed, and it's not just inflation; it's also jobs and economic growth. So their life got a whole lot harder, because the first thing these tariffs will do is push inflation up, but it's also going to, if this lasts for longer than a short time, will definitely impact the economy. The long end bond yields are already telling you that people are pricing in the increasing odds of a recession dramatically. So the Fed might be in a situation where people are shedding jobs, economy is slowing, but inflation is going up. And that's a very difficult place to be. They might have to make uncomfortable decisions. So I think the interest rates are more on the table now than they were, without a doubt. But I think the challenge of how and when to cut rates is also much more difficult than it was a few months only ago.
Yeah, well, we wouldn't want to be in their shoes. Grant, thank you so much for your time and your insights there. That was Grant Nader. He's a senior portfolio manager at Benguela Global Fund Managers.